Managing Director and Head of Research at HSBC India joins us. Good morning, Sriram. Thank you very much for joining in. It's such a confusing market and also a little bit despondent for an Indian investor that the market master is most welcome. Well, for starters, do you think we have fallen enough? It's a good 11% fall from recent highs or from all-time highs. Do you think this market has the potential to get much lower?
Good morning to all your viewers and to both of you in the studio. Well, in terms of the market level, I think markets clearly at a level where it is probably we are calling for a flat market into the year end at this point of time. So I would say it's probably close to its fair valuations. But I must confess that there are a couple of red flags which, I'm no soothsayer, but one part could be that in case the monsoon disappoint as the IMD and various other agencies have forecasted, then there is obviously some kind of downside risk that could open up on markets. The second could be on what happens elsewhere kind of a trade. There's a lot of speculation about whether China A shares could become part of indices and so on and so forth. And, we had commented on it some time back that if there is a part inclusion, it could mean about $5 billion of inflows into that market. If that goes up to, say, a full inclusion, the range could be as high as maybe even about $50 billion. So it could mean that you could see some money moving out of other markets then into those markets on the passive pools of money. So those are events beyond our ability to guesstimate in that regard. So you could have a situation where those risks could open up a little bit more outflows and maybe the market drifts down. But from a fundamental standpoint, I would say broadly, we would be more comfortable with saying that, okay, it's more like a flat market into the year end now.
Okay, so flat market into the year end, so don't expect too much by way of returns. But what about the fact that a lot of money has perhaps been moving out of India and into China? That's the sense that we get from a lot of experts. Do you see that situation continue, or do you see that trend reverse because of how overheated China has become?
Well, China, it still remains to be seen how much, valuations are still not as expensive as what you have relative to our market at this point. And at the same time, you also have an issue in terms of what happens to the passive pools of money. Now, the inclusion of these A shares into the indices could actually lead to a lot more of higher weightages for the market then. Then automatically the passive trackers will start moving money elsewhere. So I don't think that would be dictated too much by, their perception of overheating or maybe whatever the valuation the market is trading at. So that remains to be seen. I don't really know how MSCI or various other index manufacturers are going to play it out. I guess that clarity will emerge only over the course of next month and a half, but that is definitely one other red flag apart from the monsoons for our market, which could lead to some outflows in case those events were to happen.
Okay. Well, let's look at some sectoral issues as well. We've seen this ever-shining pharma sector now begin to show cracks. At least the performance, both stocks as well as earnings, was nothing to write home. Will that be a safe haven now when you see flat markets, or do you think that will give way?
Well, from a sector-wise positioning, we have been underweight the pharmaceutical sector for about 2 months now. And partly it was more because of overheated valuations. It's not so much of a earnings call, it's just that the sector valuations have probably gone, maybe even exceeded one standard deviation about historical means and stuff. So to that extent, it did look a little overheated to us. Just to put it in perspective, the pharma sector weightage in various indices locally as well has probably doubled in the last 4 years. So it is sitting on a lot of performance, and obviously that means expectations have gone up for the sector, which raises the risk profile. And then you had, a big block trade in Sun as well, which has probably fueled or fulfilled a lot of appetite for investors in the pharmaceutical space as a foreign direct investor got out and portfolio investors came into the name. So it's taken out a lot of appetite as well. But having said that, I would say that, okay, results per se, we are not seeing too much of weakness going forward. You know, there were certain one-off issues with some companies in terms of taking some merger accounting related losses, like for example a Sunrun Baxi merger and so on, which are not likely to recur. And there are a bunch of exciting drugs over on the anvil which could make individual stocks look more interesting over a period of time.
Okay. What's your view on the telecom space, Jitendra? Because we've seen, a fair amount of resilience, and in fact, as of today, the telecom stocks are actually outperforming the market. Would you recommend buying there?
We are constructive on a name like Bharti there. See, there are multiple things that are happening. One is we are finally seeing the telcos starting to roll out 4G operations now. I see a lot of press media ads from these telcos now, pitching for the 4G architecture. The second part is that data is clearly on a hockey stick in India, which, the smartphone usage, the penetration of smartphones, that ecosystem is slowly starting to evolve. And it is starting to show up in terms of rapid surge in data revenues for all the telcos. So I would say that at least from a period, telcos used to be a sector which saw the maximum earnings downgrades through the period of 11, 12, 13. I guess that phase is now going out, where earnings are starting to stabilize. You're slowly starting to see a small amount of RPM or revenue per minute improvements on the customer base, and you're starting to see data starting to take off. So we would be constructive on that space. Okay.
What about IT? Even there were cracks in the fourth quarter performance, though of course Infosys now is making some very bold noises. The other stocks did disappoint in their earnings. Will IT also form an equal or rising part of your portfolio?
No, actually that's another space we are underweight on at this point of time. It is the largest sector right now in India as per MSCI classifications. So clearly I would probably argue that growth from a overall perspective is still quite anemic in that sector. So we would tend to be quite selective in terms of our picks there. So it's not that we are overall very constructive about that space at this point of time.
Okay. You are bullish on the capital goods space as well. What in capital goods are you looking at? Is it the pure play names like the L&Ts and the BHELs, or are you looking at a lot of these road companies, a lot of these, some of them highly leveraged, but that could be a good play for the rebound in the investment cycle?
Well, there are two parts of the theme here. First of all, I think process industries investing in incremental capex is still going to be some time away, and it is not only dictated by interest rates or anything of that kind. I think it is just that people are still suffering from the hangover of the capital binge of yesteryears. So to that extent you still have this issue that there are capacity surpluses available across various sectors like refining, metals, cement. So it's not that you will see people come back and start spending in a hurry. So interest rate is only one of the variables there. I think the bigger thing is there is excess supply out there. So we don't see that instantly turning. Where India genuinely has a deficit is on the infrastructure related area. So whether it's railways, roads, or probably this whole concept of defense, where India is probably the 9th largest in terms of a defense budget, but unfortunately we've been the largest importer of defense items for the last many years. So in a sense there is very little manufactured in India, and there is scope to at least migrate some sub-assemblies, some parts, components from offshore purchases to onshore manufacture. And so these are areas or pockets that we would be more keen to take an exposure on, rather than a bunch of equipment or process industry plays, which probably is still going to struggle a little bit before normal demand growth of the economy sucks out the surplus from the market. So in that regard, I would say, see, L&T is still is a conglomerate. It has a finger in virtually every pie of India's economy. So there will be some pockets or the other always probably firing for it. And they have been quite active in terms of their investment in the defense space as well. So that is a name we are constructive about, but not so much on the power plays like BHEL, etc.
Okay, you're not positive on power.
No, we are not positive on this.
Okay. Just to get out of the sectoral discussion, Jitendra, the big question that's bedeviling everybody, facing everybody, is when does the economy turn? When do earnings turn? What's your own sense?
FY15, I think, was a kind of a watershed here, and just to give you a quick explanation here. See, the kind of commodity and crude carnage that you saw led to a lot of inventory write-downs also. I don't think those are going to recur going forward. So, although FY14 at an absolute level is quite bad in the sense of growth, but a part of it was because of what happened in global prices. Now, to add to that, you have this issue about obviously banks becoming tighter in terms of better recognition norms, RBI coming down on the banks that they need to be more prudent on their lending practices and stuff, and which is all leading to this kind of cleansing of corporate India, which is probably very much required. So those are one-time adjustment factors in my view. Going forward, I would say that earnings, if I were to remove all these kind of one-off factors, I would be comfortable saying 11-12% growth is doable for 16. But having said that, the issue is valuation-wise, it's still where we are having a little bit of a discomfort, and India still looks a little bit more expensive given the kind of state of affairs we are in. So it might be about maybe at least about 3 quarters or so before you start seeing the genuine improvement. 4Q clearly from next year will have a very low base where we should be able to post some reasonable growth going forward.
Okay. Just one more stock-specific question or rather sector-specific question before we let you go. In your key buy calls, I noticed that you have a buy on, or rather you are positive on Hindustan Zinc. Metals in general have not given very good returns in the last 6 to 8 months. Just tell us what the positive triggers could be for Hindustan Zinc.
Sure. Okay, one part that appeals to us about this company is that it's very different from all the other metals names, that it is a net cash company, so it has a huge cash balance on its books. The second part is, I would suspect that when government has a target on divestment of almost about 690 billion INR, there is a difficulty in achieving all of it through the market route. So you will need to do probably 1 or 2 strategic divestments as well. India's history has been that, the maximum we have done in terms of market offerings has been probably in the 350-400 range. So the delta has to come from 1 or 2 big bullet names which are like a Balco or a Zinc or something like that. And in case that were to happen, that would be an added trigger for people to take exposure to. Independently of all these technical issues of a government divestment and stuff like that, I would say Zinc is the one name that our global metals team is most constructive on from a 2-3 year perspective, in a sense that we do see zinc markets coming into a balance, and it's a metal that we are most constructive on.
Okay, what about Coal India? I mean, looks like the government is quite determined to make it a well-run company.
True. See, the question is only about expectation versus deliverance. See, the problem has been that in the past few years, normally people anticipated a certain volume number and it has disappointed in the past, whatever be the reason, whether rail evacuation, whether it was mining related issues and so on. But now they seem to be plugging the very gaps that have probably been a pain point for them. In a sense, these 3 railway lines to incrementally offtake. Now, I am still not of the view that you have all it takes to achieve that 1 billion ton target that the ministry has set out for it. But I think there is clearly some visibility that it can attain, 750, 800, probably in that same time frame. So at least we're moving to a trajectory where volume growth seems to be coming back to the name. So at the margin, I would say that developments are positive on the name.